Good morning. My name's Ryan Littlestone from forexflow.live. We've got a big week for central banks again this week. We had the ECB last week, and this week we've got several central banks, the Fed, BOE, BOJ, lots in the mix again. Now, the big one was the ECB last week, and we saw them cut rates as expected and enter QE, potentially unlimited QE. And this week we've got the Fed, and the market is now judging whether they're going to cut rates again. What we've seen over the last, pretty much the last 3 or 4 trading sessions is the expectations for Fed rate cuts coming right down. Last week there was a small percentage chance that the market was expecting a 50 basis point cut. Now that's come down, that's come off the table altogether. And now the market's even going the other way, where the chances of them cutting at all is lessening. The chance at the moment, there's sort of a 64-65% chance of a 25 pip cut, and staying unchanged is around 30-35%. But that was right up at the sort of 98% last week. So the market's having a little bit of a re-evaluation as we get closer to the Fed, and that's helping the dollar somewhat, because obviously if the Fed cuts, or if the Fed are going in further easing, that's a negative for the dollar. So these expectations changing are seeing the dollar firm somewhat. One of the pairs we're looking at is dollar yen, and we've seen a move up above that 108 level. This was an area that we looked at previously. I've got several big lines in the chart that define the ranges. 105 was the lower bound, and we held above that. We're now back above the 108 level, which was another big level. We're finding support there at the moment, so the market is still looking bullish in the dollar into this. We've seen 10-year yields rising. That's been a big boost behind the dollar as well. So that puts us, if we look at the daily chart, that puts us back in an area where we need to be decisive at this 108 level. We need to know whether we're going to stay above here or whether we're going to drop back. If the Fed don't cut this week, or if they're not as dovish as the market might expect, then we're going to see this gain further. That puts us into the bigger range, keeps in the bigger range of the 108 up to 114 area. And we can see that on the weekly chart. We've got these big ranges here. So up into the sort of 114, 108 was a really big range. It was a very long range that we've seen here, big consolidation period. So staying above 108 puts that range intact, and we could get a move up towards the upper edges of that. There's going to be big levels in the way, around about the big figures, 109, 110, 111. There is a potentially bigger one up at the 112 area. That's always been a sticky point, sort of mid-range for this pair. So something to watch as we go into the Fed. But on the other side, we've also got euro dollar. And if we take a look at the 4-hour chart on here, again, the euro's pretty much under the cosh. We're still messing around with this 110 area. We've had another little dip below, but we can't hold a break underneath. And so we're keeping into this 110, 111 range at the moment. The 111, 111.10 area was a level I highlighted, or have been highlighted for several weeks. I took a short up there last week. I'm still in some of that, a small portion of that, which I was exiting out all the way down as we came down to 110. But while we're at this 110 area and we're holding there, we're just sort of range bound. So pretty much we need to trade between the edges there. But again, if the Fed isn't as dovish as the market expects, then we've got the potential here for this break under 110 to become more sustained, and we could get another push down to those lows in the low 109s. I tend to feel that if we do get another break, a meaningful break under 110, this could be the one that actually moves us right down. And that'll take us right under 109, potentially down to the low 108s. So lots in the mix with the central banks coming up. Obviously, the Fed is the big one this week. A lot of focus on there again. Pretty much stick to your levels on the chart. We know them. We've had them pretty much defined for several weeks, months now. So stick to those levels. Know which ones are able to trade. There's no need to go out on a limb with any of this. So keep your risks small, and let's see how we get on. And we'll speak about this next week. Good luck to you.